I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, it's always good to be with you.
Should we worry that the hurricane expected along the Gulf Coast in Texas will cut oil production and boost prices?
Yeah, that is the initial concern, but what is happening is that there was a good rally in gasoline future because the Gulf, there's a huge refining capacity down there in Texas. So, yes, that would be disrupted, but the price of crude itself hasn't done anything too dramatic. The issue being is that there's so much crude oil production outside of the Gulf now in North America that it's sort of a ho-hum thing as far as the crude goes. But then the storm has yet to do its damage, and we'll see. But usually these prices move in anticipation. So. But I thought it was interesting that that there is so much now other production outside of the Gulf that it's keeping a lid thing on. Actually, crude oil, we figured that it would, along with the other industrial commodities like the base metals, would rally up and be firm into August. And the rally that crude did was sort of from 42 in June to 50 right at the 1st of August. So and then it's been soft since. The other one that's interesting with the crude oil is the oil stocks, which, oh gosh, we've been noting for years that they were always too high priced. There was sort of an institutional idea that you could be long the oil stocks because something awful at some point would happen in the Middle East, and then you'd get your play. So then when you had the crash in base metal prices and in crude oil prices down to January of 2016 when crude fell down to $26 and base metals got hit as hard, but the base metal mining stocks, they fell almost to 1/4 of their high. I mean, it was really a severe hit. But the oil patch stocks, the XLE, only fell in half. So that was showing you that there really was a built-in positive long position in the crude oil stocks that wasn't really looking at the huge technological revolution that has come into oil and gas production. And there's a long history of resource extraction where you've seen these sort of revolutions, like, for example, in 1910, Kennecott, with their huge copper porphyry deposit at Bingham Canyon, just south of Salt Lake City, that's where they learned how to mine large but very low-grade copper deposits. And Bingham Canyon is still operating, and it's the biggest man-made hole in the ground. So you had that one, and then in the 70s you had the mining of gold enjoyed a revolution where they learned how to put the Carlin, Nevada, large, low-grade gold deposits into production. So you had those two examples, and then now you've had, fracking has been around for decades and decades and decades. And then when you combine that was used in early days to, refresh existing production. And then when you combine that with being able to bend a drill hole and go into horizontal drilling, and then that really made the revolution, and it's very exciting. It's here to stay. And the beauty of it is that you've got this struggle now with OPEC being an attempt at a cartel, and the epitome of bureaucratic thinking is that the last, 8 or 9 months, they've arranged amongst themselves to cut back on production so they get a higher price. But, if you're selling less of it, you're not making that much money. But the beauty is that with the entrepreneurial Americans, with the shale expansion of shale production, hey, they just sell forward into it. It's been wonderful, and the entrepreneurs get the money, and the bureaucrats get to lose money. So I kind of celebrate it. So at any rate, whatever good for crude has been possible is sort of right now, and it's not that much, and the chart is not looking good, and we always keep in mind that crude oil can set some pretty dismal low prices seasonally in December, January, and this seems quite likely here because you've had the U.S. dollar is working on a base at this 92, 93, and it did touch 94 level. So, and that's looking constructive. I think the U.S. dollar can go up, and this then would our work on the base metals, the other industrial commodity sector, back in June was that this would likely rally up into August. That was the same sort of timing. And yes, the base metal prices have been doing very well, and particularly within the zinc. And we're seeing various brokerage firms coming out with called long-term studies that are very bullish. But we'll look at the dynamics on the move in zinc, for example. It's getting somewhat overbought. It can go a little further. Copper can go a little further, but it's closer to an end, and it's quite a bit away from the beginning, which last serious low was in January 2016 when everything got really stomped on. So that looks after the metals, and we had a question, didn't we?
And we'll get to that question right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Bob Hoye. Bob, we have a question from Frank in Belgium. He wants to know, how can a crash happen when everybody expects it?
Yeah, Frank, that is the profound question, and it's elusive because we have the technical measures now, and on the exciting thrust up into June, you had really good numbers on overbought on the momentum, and you had sentiment figures that were right up there, very bullish. And then more recently, showing the narrowing of the action, the Dow Industrials got up and had a really good, almost a solo rally, and got up and registered technical excesses. have that through the summer, let's just say May, June, and then again recently, tremendous enthusiasm, bullishness that put prices way up, and it clocks the momentum and it clocks the sentiment as being very positive. Now we're past that period, and there's been some reverses in credit spreads, which we follow closely. And so the market's getting a little apprehensive. Yes, so here you have, and this I think is the nub of Frank's point, is that you can have people now doubting the market, and you have also, almost got a cottage industry out there of people calling for a crash. But there have been some people calling for a crash, for the last 2 years. So that view isn't so valid. So we'll just stay with our work, which is that you've had the excesses, and you're now having some doubts, but you have the changes going on in the credit markets now, similar to the top in 2007 and in 2000. Now, what we use here is the credit spreads, but the difference between high-grade bonds and low-grade bonds, and particularly the CCC rated ones. And in 2000, you had the first breakout on the reversal to widening was in January, late January. And then we were watching for the second breakout, and that came in the middle of March, which was actually the high for the NASDAQ, where a lot of the speculation was focused. So then if you move ahead to 2007, the second breakout was in late July. That's on the widening of spreads. And the target would have been a high for September. The high was October the 11th to 12th. Close enough. So here we are now. We are, as of the last week and a bit, the spread action is working on the second breakout. So one doesn't know whether it would be coincidental with the top of the market as in 2000, or that this would precede the top of the market by a couple of months. So to wrap up on Frank's question, the enthusiasm created the highs, and the doubt is beginning to appear now. Some of the people that have been calling for a crash for the last couple of years, they've not been on the mark, but with our view, with the last number of weeks we've been writing, that is the market up when it should be? Yes. So this week's comment was that yes, the market is up when it should be, but we have been clearly bullish, and we now are no longer understandably bullish, and we're pessimistic. What the hell did I? Oh yeah. Anyways, we're cautiously pessimistic on the markets. So what it's going to take is a little more change in the credit markets, and also to have this tremendous rally in base metals roll over. Actually the base metal action is positive for the overall stock market.
We'll have more with Bob Hoye right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Bob Hoye. Bob, some people feel if you just want to know what's going to happen to the markets, you just have to watch things like Facebook and Amazon. they're down a little bit, does that mean the whole market's going to come down?
Yeah, those high flyers, the number of them really did make momentum peaks in June, July, that time, and have had a little rest, and others are making their highs. But generally, it looks like the action is focused down into just a few stocks, and that is symptomatic of the ending of a bull market. Now, here's the other thing, is that this bull market has been on since 2009, and what we've known a long time ago in the past was that the huge financial stock bubbles peaked 9 years after a preceding huge boom in commodities. So you had the high in 1929, and the commodity boom that concluded in 1920 was amazing. That was a really big one, and then it crashed real hard. Then 9 years later, you had the stock bubble. 1873 was similar, commodity and the high for the CPI inflation and the stock bubble concluded in 1873. So here we are. This is the 9 years out. Now, you also had bubbles conclude in 2000, which was no connection to commodities 9 years earlier. Same with 2007, a big commodity peak 9 years earlier. So this one has some historical fascination to it. So it's all going to be told over the next 5 or 6 weeks. So liquidity problems, if they're going to appear, have a tendency to appear in the fall.
Bob, weren't the central banks created back in the early 1900s to prevent any crashes? And how well have they done that job?
Oh, yeah. The U.S. had 2 previous central banks, and they were disasters. And so in the early 1900s, there was an urge to have a central bank by people who don't understand the markets. And they couldn't call it a central bank, so they called it the Federal Reserve System. Now, the key point in establishing this was that the idea is providing, being a lender of last resort. So if a company or a banking agency was getting in trouble, the Fed would fix it, and then there would be no problem. So the idea was that the Fed would prevent the financial distress that typically precedes a recession. And the doors opened in January 1914, and there's been 19 recessions since. So the theory doesn't work, not at all. And yet there's so many people pay attention to it. So I think that a contraction, if it appears this fall, would be a severe censorship of the notion behind the central bank. And I think the public will get onto it. They'll realize that these guys really are experimental and have used trillions of dollars of taxpayer money to, experiment in the financial markets. So this is going to be very interesting. I'm looking forward to seeing how the public does condemn the central bankers, and I think it'll happen. So good question on that one, Jim.
Well, what happens if there is no central bank?
Well, sort of the central bank is the government broker, and of late it's been corrupted to fund an experiment in unlimited government. The authoritarians have had control in virtually every country, and each country has gone to the left in its own way. And the central banks have been corrupted into providing endless funding for an endless experiment in authoritarian government. But this could run out if you get a crack in the financial markets. Then the perpetual funding machine could become broken. That is highly possible. So this fall is going to be very interesting.
Should banks be allowed to fail?
Yeah. Everything should be allowed to fail, and this is part of the problem where the authorities have felt that you can't have failure and have tried to prop things up. Now, the other problem with the notion about being the lender of last resort is that theory assumes that only one bank or company gets into financial difficulty at a time. But marketplace being what it is, and the pigeons all flocking together, is that everybody becomes highly speculative. So even large companies and large banks become overexposed. And so then when the problem appears, the notion of a lender of last resort just isn't big enough to handle the problem. Now also there's another sophistication on the whole thing, is that the street has the assumption that with the central bank backing them up, that there's no risk. So what does it do? Takes on more risk. So it sort of nullifies the notion of backup by the central bank, because the speculation becomes even greater. So it then overwhelms what possible backup there is, and then beside that, you now got 100 years of history, whereby the Fed did not prevent 19 recessions, and the theory was that by preventing a financial crisis, they would prevent a recession. So it's just, Jim, not working, and that's as simple as that.
What could work?
Nothing. There's no agency that could intervene successfully. The best thing is to have a sound currency and no intrusion, and let the financial markets and business and industry and mining and all work it out on their own. And this, of course, was what was happening during a long period when Great Britain was in ascendancy, and the Bank of England was there just merely to keep a gold reserve behind the currency. So all the way through the late 1800s and 1900s was just fabulous growth, increase in productivity, everything becoming more efficient, and it was as best as you can get. But with the intrusion over the last, becoming very intense over the last 30 years, the public knows that it's getting screwed. There's been no net increase in take-home pay since the 1970s, and getting a little restless there, whereas the take-home pay of anybody working in government is very good. So there's no wonder you've got a popular uprising going on, mainly in the U.S. at the moment, but with a setback in the economy, it could appear in other countries as well. So the political side is going to be exciting.
Canada and Britain have sold off all their gold. Was that a wise move?
No. But it was a way of two things on that, Jim. The economists, interventionist economists, hate gold, so they wanted to get rid of it. The other thing is they persuaded, I guess, their political leaders that this was a good way of raising money by selling the gold. And then part of England selling its gold was that long-term capital management LTCM disaster was on the wrong side of the gold thing, so they needed to have somebody to drive the price of gold down to kind of settle the accounts. And so that's where England ended up selling gold right down to $253. But what you've had is intellectuals becoming too involved with the financial markets. And they're capable of coming up with theories, and I've got no problem with that. But the problem arrives when an intellectual is able then to persuade a government or a government agency to put their ideas to work. And of course, the idea of an interventionist central bank is the epitome of an intellectual getting control of power. And the idea of intrusion here was that what is really good is currency depreciation, although they would say it was to provide liquidity and credit. But since 1914, the U.S. dollar is now only 3% purchasing power of what it had in 1914. And that is just strictly on these guys experimenting, trying to keep a boom going or whatever they were concerned about at the time. And the intrusive central banking is the greatest intellectual failure in history. Absolute nonsense. So I think the public will figure it out, and there will be, it'll all be part of reforming the excesses of government, which could become rather exciting when the folks see that the intrusion by the central banks are not creating prosperity. It's creating the opposite. So, Jim, we live in interesting times.
And that's what keeps us in business, Bob.
Very good.
Have a great weekend.
You too, and thanks for the interview.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. The quality on YouTube is also terrific, so if you're having trouble just listening on your computer, go to YouTube and listen to us there. And somehow they make it sound better than I thought it originally could be. Also, if you have any questions for Bob or any of our other guests, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.